This is our video blog where I'm going to show you how our charts look each day. A lot of people ask for a trial of our software which requires e-signal data. E-signal data is expensive. We don't have free trials of that. Sometimes e-signal has a 30-day money-back guarantee, but most people don't want to go through the hassle of that. This lets you test our software through our daily video blog and see how the software works. This is the first day of this in practice. In looking at the chart, you see the hourly moving average in the middle. Underneath that, it's more likely to go down. When it's above the hourly moving average, it's more likely to go up. We have a lot of support resistance areas on the chart as well as our counter trend signals. This shows the intensity. Anytime you see this hit or go above the dotted white line, it shows an intense move, which oftentimes, in our opinion, it's likely to continue. We call this the trend explosion system. So anytime you see that, you look for selling a pullback up. When the trend line gets broken, you can see you went short right here at 63. Price fell 20-something pips, hit the previous day's low and wasn't able to go underneath it. And on the way down, you can see it was no longer weak. And so when you go short after a previous downtrend that's very weak, and the market retraces back up and you go short, if on the way back down it doesn't have that much weakness, you want to get out of your trade or move your stop to break even. Also, one of our trading systems is anytime the market shows intense weakness and comes back up to the hourly and can't get above it, you look to sell. So you might have gone short right here. The market went sideways. You would have got out with a small loss, break even, or a small profit. And one of our systems is to look for a multi-hour sideways rectangle pattern, especially after having previous weakness. Daily, weekly, monthly trends down. You're underneath the hourly. You should not be looking to buy this. You should be looking to sell it. And when it finally breaks down this time, because the market broke through the low before and hit it 2 other times, it's very likely to go through this support level. It's likely to stall at our fib level here. And so that would have been a good place to get out with a profit target. Aggressive traders might have looked to buy there because it's a lower containment band and the market fell without that much weakness. You can see it went up 10-15 pips and then came down, stopped you out. Anytime a Fibonacci level gets broken, that is a major sign of weakness. It penetrated here. We call this a retest, and that's a great place to go short because of the previous weakness. And then you draw your fibs on this move down, and that gives you an idea of where your profit target is. You either get out of half your trade at the first fib target, comes down to the second one, you have a bunch of counter trend buy signals right here, and you're out of that trade. Let's go on to the next currency. Here's the pound dollar, and again you can see the daily trends down, the weekly trends down, the monthly trends slightly up. The price is underneath the hourly. We had a narrow range pattern right here. Last night you might have shorted right here and you would have had a loss. It comes up to the hourly, can't get above it. You can see there's no strength on the way up. That's a good sell. Comes up again, and again there's not that much momentum on the upside. You might have gotten short here with a small win or a small loss, and it really took a while. The market's really chopping around in a little sideways rectangle pattern. I would have waited after shorting the hourly a few times and not having any success from it, of going short here, and you can see the market fell. We have some counter trend buy signals right here, and the market really wasn't that weak. I would have got out of that trade right here and probably would not have taken this trade here because it didn't fall with a lot of intensity. The Euro yen and the New Zealand yen were the weakest ones today, and that's the one that I would have been focusing on instead of this trade here. But anytime you see a trend move, counter trend, little pullback, if you did take that trade, you'd want to draw your fibs on there and really consider getting out at the first or second fib target. That makes the most sense most times, you'll find. Here's the dollar Swiss. The daily trend was slightly down earlier. The weekly trend flipped back and forth, and the monthly trend was long. You know, a lot of currencies chop around before they have a clear trend direction, and when you look at the trend direction and it isn't that weak, you probably don't want to get short here at the hourly, especially because the price came up to the hourly and it was extremely strong. You know, if you did get short right here, you can see the market pulled back a little bit. It wasn't that weak, telling you that the dollar wasn't that weak at that time and the Swiss wasn't that strong right here. And anytime a currency goes up with a lot of strength, chops around sideways, and you don't see that much momentum to the downside, when it finally breaks out right here, this is a really good trade, and you can see it had explosive trend strength again. Anytime you see plus 20 strength, that trend oftentimes continues, and you can see it did here. Because of this huge move up, you might have bought this little pullback right here, and the upper containment bands or trading zones make a good place to get out of that trade. But those are two good trades. Earlier today, I probably would not have taken this trade myself, but you can see a very low volatility range for multiple hours. This is a rectangle pattern in action. You can't really sell right here because of the major support levels underneath there, but once it breaks right here, you could with the lower containment band or farther as potential profit targets. Here's the dollar CAD. Price is right around the hourly here, the daily, weekly, monthly trend just slightly up. There wasn't a whole lot of momentum earlier today, but when it hits the hourly and doesn't go through it, you might have bought there. You might have got in here. If you bought the hourly right here, you would have lost money. The price broke back above the hourly. It's usually a better idea to wait for some signs of momentum like this right here at 8 and then buy the pullback where you could have made a little bit of money there. You have absolutely beautiful wedge pattern right here, wedge pattern breakouts when the daily, weekly, monthly trend are up and the price is above the hourly. Usually are good trades. You can see the market went up 10-15 pips, pulled back. You either made a little bit of money here, or you lost, or you broke even, or you stood into this trade. If you did get stopped out of this with a loss, you get back again here, and then you draw your fibs on this previous swing up, and you look to get out near one of these fib targets, as you can see. This is also the projected fib target and likely high of the day projected by me each day. I manually draw these on the charts, and our software plots them on your charts for you. And again, extreme strength, looking to buy a pullback. This is an Elliott two-wave pullback right here. You watched a video for further explanation of that. Anytime you have an explosive move up and it pulls back, you usually can get in at the Fibonacci levels after a two-wave pullback, and that shot up 20 pips. This was one of the weakest currencies today. You can see it happened right here at 5. Off the charts momentum. The price was kind of chopping around the hourly right here, and there's a lot of Fibonacci retracement levels and profit target levels on the chart, so it makes it a little tougher to trade because it really likely could find support here and here and here. Today the momentum to the downside was so weak that it shot through those levels, but right here it went down. You have a sideways rectangle pattern. You go short, and the lower containment bands oftentimes are the end of the move. So if it breaks through all this support, short this around 113.10. Your potential profit target is 50. That's 60 pips away. Anytime you can take a trade with a tight 5 to 15 pip stop where your profit target could be 30, 40, 50 pips away, you got to take the trade. It's not about winning percentage in Forex. It's about taking trades that have the potential to give you many multiples times more when you're right than the losses you take when you're wrong. So you can see here, this was a perfect trend explosion system, and that led to its decline. You have off the charts weakness right here too, so you might have shorted this little up move right here, and at that point you want to draw your fibs on there. Don't get greedy. Look to get out somewhere near the fib targets down here. If the market explodes through a fib target, then by all means, if it hits the 2.0 level or you see any signs of it retracing, you want to get the heck out of the trade. But this was an off the charts explosive move, and our currency meter showed the euro yen and the New Zealand yen were the weakest pairs today, and those are the ones you should have been looking for sells. This is a perfect example of what happens when you sell the weakest of all the currencies. Here's another weak currency, the New Zealand yen, and you saw it right here, off the charts weakness, and then it came back up, tested the previous day's low. There was some other resistance there, weekly S1 pivot. When it hit that level and it couldn't get above it and go sideways, you can see the strength on the way up was nothing in comparison to the weakness on the way down. You might have gone short right here at 64.05 with your stop above the swing, and on the way down right here there's incredible weakness. You probably would have got out of somewhere in here of your trade. The market went up again, couldn't get above the weekly S1. Again, not that much strength compared to the weakness. Either you stayed with this trade or you got short again right here, and then the market fell off a cliff and you can see incredible weakness. This in the euro yen with the weakest two pairs today. Now when it gets underneath the lower containment band, you almost never want to buy. Sorry, I take that back. When it gets underneath the lower containment band, it's riskier to sell because the market frequently hits these levels and reverses. Markets rarely go this far underneath the containment band without exploding up violently. So one of the counter trend methods you can take underneath the lower containment band is draw your fibs on there and look to get into a counter trend trade down near the first and second fib target, especially if you come down here without this much weakness. Now me, I would not have bought this because it was one of the weakest currencies. But once it went up and formed a 1, 2, 3 low and a little wedge pattern right here at the bottom, it becomes a little bit better buy, and you can see the market shot up 10, 15 pips, ran out of steam. It had moderate strength, which as time went on fell off a cliff even before the down move happened again.